1, 0, and liftoff. Liftoff. Americans return to space as Discovery clears the tower.
Welcome back to TTMTrades. Today we're going to be doing our daily review on ticker BPMX, AKER, and ticker MYO, and what I'm seeing and what I think about them. Now, just because I'm doing a review on these, this is not me telling you to jump in these stocks head first, okay? Simple review. I know a lot of people have been on these stocks and playing them, and I know BPMX and AKER and MYO, I've been following them for quite some time now, so I just want to update everybody on what I see and what they can expect from what I'm seeing due to my technical analysis. But up to 2,500 followers, deeply appreciate every single one of you. Up to 1,110 subscribers, we are moving and grooving, and we are getting to that 10K together. So make sure you hit that subscribe button. All right, so let's just jump right into it. So I came home, ran my scanners, right? As I ran my scanners, ticker AKER, BPMX, and MYO popped up on them again, and they haven't been on my scanners for quite some time. So for them to pop back up, that tells me that something that I look for is beginning to happen. So looking at ticker AKER. So for a lot of you, I'm gonna do this breakdown based off how I trade. Okay, so a lot of you don't know I use the Bollinger Bands as my trading strategy. Okay, a lot of people know about the 2 standard deviation Bollinger Bands, where you have this middle 20 period moving average with the 2 standard deviation, which is the 2 tail lines on the outside. I use 2 Bollinger Bands. I use a 1 standard deviation, which you can see as the green line, which I call my money lines, and then I have the 2 standard deviation. So you know, it separates this into different zones for me, 4 different zones, 1, 2, 3, 4. All right, so the middle line is a 20 period moving average, and just a long story short, anytime a stock is in a strong downtrend, it will stay between the 2 bottom bands, and that bottom 1 standard deviation bottom Bollinger Band acts as a 10 period moving average as it moves parallel to its 20 period moving average. So if it's in a strong downtrend, it'll stay between the 2 bottom Bollinger Bands. Anytime it's in a strong uptrend, it'll stay between the top 2 Bollinger Bands. Okay. Anytime it's in this bottom one, then you know, strong downtrend. If it moves up into the next zone, then you know it's still very bearish. Anytime a stock breaks above its 20 period moving average, then that puts it in the bullish zone, which we call zone 3 right here. And then anytime you move in the top 2 Bollinger Bands on strong volume and consistency, then that starts a strong uptrend, which is a very bullish trend. Okay, but we don't pay attention to stocks too much until they break above their 20 period moving average. Okay, so now that all of that is out the way, all right, what am I seeing on ticker AKER? So we've been tracking ticker AKER from 15 cents all the way back in early January, and it's been running very bullish, as you can see, holding between the top 2 Bollinger Bands on each run up. Even on the pullback, it's still held above its 20 period moving average, which is still very bullish as it stays in that bullish zone. Continues to push up, pulls back into that 20 period moving average. Again, running up, making another new high at 98 cents. This is why I forewarned everybody that they may want to start exiting their positions due to ticker AKER making a new high on a very low volume. Okay, so as you can see here, that was very low volume compared to the volume on this high, the volume on that high, the volume on these past highs. As you can see, each one of them had high volume, and then when they made that high of 98 cents, it was on very low volume. So it was a little suspicious. For wanted everybody to get out. So AKER has literally dropped from 98 cents all the way down to 45 cents. So why did it find support in this 45 cent area, right? Anytime a stock goes between, anytime it breaks out of the Bollinger Bands, and what I mean by that is if it's in the bottom 2 Bollinger Bands, which is signaling a downtrend, and the Bollinger Bands begin to expand, as you see here, they were constricting, coming inward, tightening up, signaling a breakout, and then it broke out to the upside and then started heading downward to signal the downtrend between the bottom 2 Bollinger Bands. So why did it find support right here in this 45 cent area? Okay, so normally I go big picture, right? Anytime a stock is breaking out of the Bollinger Bands and I'm unable to see or gauge where the stock may be going due to it on a strong downtrend or strong uptrend, then I will zoom out big picture and go to the weekly charts. So if you go to the weekly charts and take a look, had the big run up, hit that 50 period moving average, which we've been pointing out traditionally for quite some time now, is where ticker AKER has issues breaking through. Failed here, failed here. Mind you, the 50 period moving average is the yellow line. So failed here, failed here. We forewarned that it would fail again on the weekly charts, and it did. It ran up into that 50 period moving average and got smacked down. Now, what are we looking at? So looking at ticker AKER, as you can see, it began pulling back, and then as it was pulling back, of course it was on high volume here with a nice little candle wick, and then it pulled back right into that 20 period moving average on the weekly, which is right at 46 cents. And then immediately when it hit that 20 period moving average, the shares were accumulated and it pushed it back up to this give or take 54 to 55 cent range. And this was last week. This is 1 week's worth of candlestick price action. And then as you can see this week, you have a nice little doji forming right here. As you see, the bears and the bulls are kind of at a stalemate and the volume is very low. So one thing to note is, as a stock is pulling back, if the volume is decreasing on each lower low, then that tells you that the selling and or the sellers are exiting the stock, and there's not a lot of sellers left. Now, if this stock was to continue to drop on higher volume, on increased volume each and every time, then that tells you it's a lot of selling still going on in this stock, and you don't really want to touch it or mess with it. But a couple bullish signals is the fact that it, on the bigger picture, on the weekly, it pulled back until its 20 period moving average found support, and immediately the shares were accumulated. And then the following week, on lower volume, there's a stalemate between the bulls and the bears, and it forms a doji, which is an indecision candlestick. Another thing to pay attention to is anytime the stock is on a downtrend, it will continue to make lower lows. Okay, so as you can see here, a low, lower low, lower low, and then you have this indecision candle this week, which in turn it shows the bears were unable to push this back into the lows of that 46, and then it shows that the bulls are unable to push it higher than its high of give or take 59 to 60, whatever this high was right here. So you're just at a stalemate right now. So what you need to look for going into next week is a confirmation candle, meaning either one or two things are going to happen. This is going to, the bears are going to take control, and they're going to push this stock back down into the lows of 46 with no problems, and or the bulls are going to begin taking control, and they won't allow a lower low, which was lower than this week at 51. It was this week's low, 51. They won't allow the stock to go lower than 51, and then they would create a higher high, which is showing you that there's some type of reversal in play. So what I would look at going into next week is the stock holds above 51 cents, because I think for the rest of the week the stock isn't going to move anymore. It's pretty much at a stalemate right at 56 cents. So this is probably where the stock is going to stay. But going into next week, I would see if the bears, well, not bears, I would see if the bulls can hold this above 51 cents to keep the bears from pushing it lower, and at the same time see if they create a higher high, higher than 58 cents as you've seen during this week's price action. If you see that going into next week, then that shows you the selling of the bears is getting weak, and the bulls are beginning to come back in and accumulate this stock, and they're trying to push it back up. Now, if that does happen next week, what is that line of resistance you need to look at? Well, traditionally, like we pointed at, the 50 period moving average has been a big issue for ticker AKER. So right now, as you can see, it is sitting right at 80 cents. So if you get that run going into next week from 56, and you begin, and for number one, you push through the 69, as you can see where the 68, where the one standard top deviation Bollinger Band is sitting. If you push through that 68 cent and you begin heading into that 80 cent, then I would start looking at locking in some type of profits, because this 50 period moving average has been giving ticker AKER problems for the past year, give or take. So Like I said, I will look to make sure the bears are unable to create a lower low, and then you get that push up into that 68 and that 80 and to try to lock in some profit. So let's take an AKER. Now ticker BPMX, we are seeing the exact same thing. So ticker BPMX had that run up, right? Hit that 50 period moving average, got rejected, as you can see here, began pulling back. And then as it began pulling back, it hit its 20 period moving average right at 18 cents, and then the shares were immediately accumulated. Now, just like we said on AKER, you want to wait on that confirmation going into next week that the bulls do not allow the bears to make a lower low. This is already happening with ticker BPMX. So as you can see here, on 2 weeks straight last week, they were unable to make a lower low, and they were unable to make a higher high, but the bulls kept control of the stock and they closed it in the green. Okay, well, my candlesticks are tail, but they closed it in the green. And then this week, following through from last week, they made a higher high and a higher low, and then you can see the volume at the bottom is consistent, which shows that the bulls are consistently coming in and accumulating these shares and pushing it higher. So we'll keep an eye on ticker BPMX to see if it'll continue making higher highs and higher lows going into next week. But just know that line of resistance, which is the 50 period moving average, the yellow line, is sitting right at 28 cents. So if you do try to play this one, be mindful of the 28 cent break above, and then you want to see that go on higher than average volume to show that breakout. But the bulls are already coming in and making higher highs and accumulating the shares, and sooner or later, drink a soda, man, you got a burp. Sooner or later, the bulls will take full control and pile in on top of this and begin pushing this one back up. So I would just keep an eye on ticker BPMX, and then even if you go in on the daily and look, right, zoom in with a microscope, you can see it was on that downtrend between the bottom two Bollinger Bands, and it began trending sideways to break above the 1 standard deviation Bollinger Band, hold above it, and then get a nice bounce above it to break above its 50 period moving average, 200 period moving average, and its 20 period moving average. So the price action is currently sitting directly on top of it. So I would watch this one going into next week to see if there's some possible consolidation right on top of its 200 period moving average to show that the bulls want to hold it above that. And then if they can, then I would start paying attention for a breakout. As you can see, the Bollinger Bands are beginning to constrict, showing that a breakout is here around the corner sometime soon, which could possibly be a breakout heading into these highs of 37 cents again. But keep an eye on ticker BPMX. And then last but not least, ticker MYO. So been playing this one left and right, played it back here at that 280 range up into this $4 range. Then we played it back here, and then we've been playing every single pullback and executing each one perfectly. And then I believe the earnings report or some type of news came out, and then it went on this nasty downtrend. Now again, what did I tell you? Anytime a stock is on a nasty downtrend and heading outside of those Bollinger Bands, then I zoom out to the weekly to get a big picture of what's going on. So if we go out to the weekly and look at ticker MYO and get the big picture, then you can see it was trending down and it went right below that 1 standard deviation Bollinger Band, and then immediately, as you can see here on accumulation, it was the shares were bought and brought right back above that 1 standard deviation Bollinger Band. And then you can see the bears tried to take back control of this stock, which caused this indecision candlestick last week, which is a shooting star based off its positioning, trying to head back into the uptrend. And the bears are unable to take control. Now you can see this week the bulls are still accumulating the shares, and they're trying to create a higher high. So last week's high was 344. Hopefully this week we want to close out the week higher than 344, and possibly right around the 20 period moving average right at 375. If that happens, then that's a strong signal going into next week that we can get a continuation of making higher highs. But yeah, that's what we're seeing right now on the weekly. We're holding above that 1 standard deviation Bollinger Band. Now going into the daily, paying attention. Everyone knows I trade with the RSI, so I'm not even going to go back into breaking that one down. But looking at our indicators, as you can see, you was on the strong downtrend. You had to break above. We're back on the daily, that 1 standard deviation Bollinger Band, and now the price action is trending sideways with the bulls and the bears at a stalemate. As you can see, the Bollinger Bands are beginning to come in nice and tight to constrict to show that the volatility is low. So there is a possible breakout here soon. Even coming down and looking at your CCI to show the rate of change in the price, you can see that the rate of change is switching into the bull's favor. As you can see here, we was below that 10 and 50 period moving average the entire time, and then finally, as we hit that oversold condition right here for a double bottom, it had to break out above the 10 and then was rejected by that 50 and was kind of in between, and then finally had to break out above the 50 at the same time. So I use the CCI as a precursor to what the price action is going to do. So as you can see right now, it's signaling that a breakout is possibly going to happen to the upside, with the bulls having complete control. Now, taking this up to our RSI, which measures momentum. As you can see, we was even below that 10 and 30 period moving average, then finally had that breakout above the 10 and 30, and we've been consolidating between the two, and then finally had to break out above the both of them. So right now what we want to see is we see momentum beginning to shift into the bulls' favor. The only thing we're lacking right now is volume, right? And the volume is very low, below average volume. But normally with consolidation patterns, before a big breakout, the volume is very low in consolidation patterns. And normally when you get that volume spike above average, it's the signal buying interest is coming in play, and it's normally during a breakout. So what do I mean? If you look during this consolidation pattern right here, you can see the volume is very low, and then finally you got that spike of volume right here to show the breakout, and then the price action continued. Same thing here. If you look in this general area during this consolidation period, the volume was very low, below average, and then you get this one volume spike right here above average to signal that a breakout is coming into play and that buying interest is coming into play, and then you finally get the breakout. So you see it each and every time. That's why volume is very important as far as being able to analyze volume. Even right here during this small consolidation period, you come down, the volume was very low. Right here, this consolidation period here, and you see the volume is very low, and then you get this one volume spike right here to signal that the breakout is happening, and then you get the run up in the thing. So in the price action, so same thing we want to see here right now. The same pattern. The volume is very low right now, as you can see, a consolidation pattern. That's why your Bollinger Bands are beginning to constrict with the volume being low. What we want to look for is a volume spike above average to signal that a buy-in is coming into effect and the bulls are taking control. Once we get that volume spike, then that can and will be the precursor to the breakout that's bound to happen. So these three I would keep an eye on for possible breakouts here back to the upside, to recover some of those losses that have happened here as of lately. With all three, I'm going on downtrends for major runs. So again, TTMTrades, if you learned anything, please subscribe to the YouTube channel, follow me on Stock Twits, and then if you need to reach me, you can join our private chat where we talk about a lot of different stocks and what we're watching, and all of our traders go over charts and playlists for the next day. This is a good way to reach out to us and get in contact with us also, and it's free of charge. We're all pretty much helping each other make money together. So as long as you're contributing and helping the group and you're adding value to the group, then we have no issues with you being in there. But again, TTMTrades, till next time, I'm out.
Listen, Tranquility Base here. The Eagle has landed.